Hi everyone, good morning and welcome to today's morning report on Friday the 5th of May with me, Richard Perry, market analyst at Hantech Markets. We've got a fairly sort of settled market outlook today, and that's sort of coming with, I think, sort of possibly a run up towards non-farm payrolls really. We've not really got a great deal of dollar direction. The dollar rally that we had seen in the past few days is just sort of settling down a little bit. We had this rally that sort of continued higher, very slight gains on the dollar today, and that's only come in the last few minutes as the euro has just sort of weakened slightly, but nothing too significant. And I think traders will be sort of wondering whether this rally on the dollar is just an unwinding move that ultimately gets sold back into again, because there is overhead supply, significant overhead supply from all those that April range that we saw there. And that comes in on dollar index around 93.60 area. And interestingly, looking at the sort of treasury yields, really, you're not really seeing any sort of real sign that the dollar should be rallying. With treasury yields continuing to fall, so that leaves me a little bit suspicious as to this recovery that we've seen. So it's a very strange move. I think ultimately, I don't think there's a great deal of weight behind it necessarily. And I think I'll sort of talk through all my forex pairs in a bit, but you'll see that they're sort of retracing back towards their breakout levels, and it'll be interesting to see if the dollar rally just starts to sort of lose momentum and then possibly reverses once again. And it'll be interesting to see if that happens today. In terms of equity markets, we've got a rally, and that comes as the oil price has turned around. That oil price has turned around on the news of the production issues in Canada with the wildfires impacting on the oil sands production there. So the oil price has jumped over 2% today, and that has helped to sort of stabilise a recent decline in equity markets that we've seen. So what else have we got to look forward to today? Well, we have got the UK services PMIs, if I can find it. Here we go. UK services PMI at 9:30, expected to come in at 53.5, so slightly down, but you can certainly see that there is a negative trend on the UK services PMIs in last couple of years, really, but it doesn't bode all that well for growth, because service sector PMI is around about, well, service sector for the UK is around about 20% of the economy, so it would certainly suggest that growth is still sort of on a sort of negative trajectory coming back, but it's still above 50, which is a positive, but losing traction certainly. So my jobless claims at 1:30. Forgot. Jobless claims at 1:30. Expected to come in at 260,000. So again, basically, just pretty low levels on jobless claims, and again, continuing on this negative trajectory on jobless claims, which is a positive for the labour market. Now, we've got my chart of the day, which is the dollar CAD. Now, dollar CAD has been on a sharp negative downtrend channel, but we had a big rally yesterday and the day before. The day before we had a bullish engulfing candle, and yesterday's rally actually continued the move and has broken through the downtrend channel now. And not only that, that sort of move has been confirmed by an improvement on the RSI, which is above 50. Sort of like the mid-high 40s was where the previous rallies continued to roll over on this downtrend channel. The move above 50 is a positive. You got the stochastics crossover buy signal confirmed near term. So it just all sort of points towards an improvement in the outlook, really. Now we've broken through the initial support overnight, initial support of this sort of pivot band overnight. Initially at 27.40, 27.50, and also the 28.35, which was, if I sort of zoom back, it was a key old level on key old pivot level, 28.35. So breaking back above that and holding above that would be a positive, certainly. And if you look on the hourly chart, you can see here this the importance of 27.50 again. coming in there as that line. And we've just seen a slight sort of retracement of the move overnight as this sort of oil price has started to strengthen again on that news out from Canada Oil Sands. But I don't necessarily think it's going to be all that sustainable. But there is a big sort of turnaround question mark over the dollar, whether it can continue to rally. Obviously, that dollar has been under huge corrective pressure in the last few months against the Canadian dollar. But will this recovery last? I think it needs to break above that 29.90 reaction high, because that is the latest reaction high within that came within the downtrend channel. So break above that, I think, would be a signal of intent for the bulls. So I'd be saying above 29.90 would sort of confirm that the bulls were gathering traction. I think at the moment this could just turn out to be well, the signs are at the moment that the Canadian dollar strength has sort of finished, really, and that would be the inference from the broken downtrend channel. But that doesn't necessarily mean that we're going to get a new big dollar uptrend. It could just turn out to be a sideways move. So you'd be looking for sort of key resistance levels overhead to be broken for that signal, and I think 29.90 would be one of those. So watch out for that. But certainly, I think this downtrend channel has been broken. I think that the Canadian dollar strength seems to be at an end. Now, if you get a retracement back towards 27.50, which is this old pivot line, and it finds support above there and then turns higher, I think again that would be a positive near-term signal. So that is a key level to be watching out for on the downside. But certainly at the moment we need to see more confirmation, I think, of the move, and the improvement is there, but needs more confirmation. So I hope that helps you on dollar CAD today, and I wish you good luck in your trading, and I'll speak to you later. Thank you.